From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for October 2nd, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. And as always, be sure to use appropriate risk management strategies in all trade setups. Let's get started here on the USDCHF, the US dollar versus the Swiss franc on the daily time frame. Overall for 2017, this currency pair has been in a downtrend. You can see the long-term blue trend line up here at the top of the chart, the shorter black trend line. For much of the year, it's been in a downtrend, but we've seen a little bit of a recent change in that direction over the past couple of weeks. Let's zoom it in here a little bit. You can see this black box, the significant resistance, 97.50, 97.65, the green shaded area, top of the black box. I've got it circled back here 3 times, 1, 2, 3 blue circles, even in the most recent time frame, just at the top of the blue box, finding resistance there again. If we're going to continue the upside rise that we've seen for the past 2 or 3 weeks, it's going to be an imperative that it breaks above that green shaded area, the 97.50-65 level. Otherwise, resistance being seen there right now. I think it's interesting we're above the black trend line. That was the first hurdle to get through, above the black trend line. Secondly, we're above the 100 period simple moving average. If we zoom it in one more time, you can see over the past several days, we've been sitting above that 100 period simple moving average. So I think that's important for us this week. And as long as it sits above there, we don't want to go short. In fact, we might even be looking for opportunities to go long on dips towards the bottom of this blue box, the bottom of, or towards the 100 period moving average, the support into 96.65, 96.45 for the US franc. Otherwise, a break above 97.20, the top of the yellow zone, leads us back to the green zone. Above the green zone, we look for it to go higher. And really, at this point, looking to go short only happens if it breaks down under the blue shaded area, 96.45 for the dollar franc this week. Let's move on over to the euro dollar. Now looking at the euro dollar, we see the exact opposite, where the market has been in a long-term uptrend, but in recent days it's switched its direction to a downtrend along the red trend line. Look at the pattern within the trend, the boxes that I drew, the congestion breakout, all the way up within the trend. Now we see a little bit of a different behavior up at the black box at the top, where instead of it breaking to the top side, it's broken to the bottom side under the black trend line and under the black box. Let's go ahead and zoom it in on that, and you can see it started to change its behavior, finding resistance at the yellow zone, broke the orange zone a few days ago, down to the blue zone, a little bit of a retracement back to the green zone, and now we're falling back down. If it's going to continue to go lower in the pattern that we've been seeing over the past few days, the imperative here, that it hasn't done yet, is that it breaks through the blue shaded area, 1.1705, 1740. It's got to get through there if it's going to go lower. The last time we were here, zoom it out a little bit, look at the blue circle. It couldn't break through it, back underneath it, and went back up. So this is our main area we want to focus in on this week, the blue zone. 1705, 1740. As long as it's above it, could find support and make another rally, but breaking through that blue zone, we'll look for further effort lower for the euro dollar. Moving over to the GBPUSD, similar situation. Was our uptrend, now looking more bearish. We've actually broken through our supports now, 1.3315, 3350, the pink shaded area. Very interesting there. Taking Fibonacci from the bottom to the top of the red trend line, 382 Fibonacci retracement level sitting at 1.3320, just at the bottom of the pink zone. We're now seeing the breakdown of that pink zone, and our next support level that we would see, 50% retracement level, and also some historical resistance and support right around 1.32, 1.3235, the green shaded area. So now that we're underneath the pink zone, we're targeting the green zone, just like it did back here. We're looking at under the pink zone down to the green zone. If it finds support at the green zone, maybe a bounce back up. But right now between there, we're just waiting to see what the market's going to do. Take it down to the 4-hour time frame. What I'm typically going to be looking for is the breakdown of that support. So we're challenging it, we're testing it. You know, suddenly this could turn into a blue candle. We don't know. So we need to wait and see if it's actually going to stay underneath this pink zone. Then if it does, we'll look for maybe a retracement back up to the pink zone to improve our risk reward, and then maybe a short opportunity back down to the green zone for the pound dollar this week. Moving over to the USDCAD, again, changing directions. It was a downtrend. Now we're staying along the black trend line, the market moving higher. Zoom it in here on the dollar CAD. Look back here where the blue box is. Support at the orange zone, resistance in the green zone, break above the green zone, it goes higher. So that's where we are right now. Just like the blue box back here, if you're going to buy something, it's always better to buy it at a lower price. So I would say if you're going to buy this, you want to do it close as possible to that orange shaded area, not at the green zone. We know that the green zone has a high potential to be resistance for the dollar CAD, just by history tells us that, right? So we don't really want to go long into the green shaded area. If we're going to go long, we'd rather do it down here at the orange zone. So at least right now we have to wait for that opportunity. Again, zoom it out a little bit so you can see that blue box back here. Where was the best place to go long inside the blue box? The orange shaded area. So that's what we're looking at today. No real reason to go short here other than the fact that it's at resistance. In fact, a breakout above that resistance in that green zone could lead us higher for the dollar CAD. Moving over to the dollar yen, Friday, we took a trade opportunity. You can see the trade going down here at the very bottom of my chart. 112.35 was the long, and it's worked out quite nicely. Holding it over the weekend, sitting, we've seen a little bit more profit than we have right now, but holding it over the weekend, giving us an opportunity to come back into the market today and protect that profit. There's been a pattern within the trend. I don't think it's too hard to see along the black trend line. Congestion breakout, just like what we looked at on the euro. Congestion breakout, congestion support breakout, congestion support. So here we are, black box again, top of the right hand side of the trend. If you're going to buy something, you buy the blue zone. That's where we bought it, down here in the middle of the blue zone. Again, 112.35 was the long from last week. Holding stop loss is now 112.50. We're at the purple zone, 112.70, 112.90. If we're going to realize the orange zone, 113.15, we needed to get through the purple shaded area, 4-hour time frame. It's just kind of sitting in there right now. So what we need to see today, if we're going to see some more profit from our buy that's way down here inside the blue zone, we need it to break the purple zone, 112.90, 113, and then we'll realize more profit to the orange zone. Protect profit if you have it. If you're not in the buy, at least right now, I don't think it's the best time to buy. It's just kind of in congestion and stagnant right now. Needs to get through 112.90 before I would expect it will go higher. We'll look at that a little bit deeper later today in the live trade room. Moving on over to the AUDUSD, again, shift in direction. Blue trend line uptrend, red trend line, it's starting to move lower again, isn't it? Let's go ahead and zoom it in here on the Australian dollar, and you can see this yellow shaded area, 78.08. Well, we'll just call it 78.10. 78.30 is the yellow shaded area. Look at the green circles back here. We see resistance, we see support. So it's not too hard to figure that if we're going to see it go lower, it's got to break through 78.05, 78.10 before we can realize further profit down towards, or further movement down towards either the 100 period moving average or the green shaded area. Interesting enough, previous uptrend, the blue trend line, 382. Sitting right here, Fibonacci retracement level 78.20, yellow zone. If it breaks at 382, 50% is the green shaded area. Take it down to the 4-hour time frame. Again, we need to see the breakdown. It hasn't actually done it yet. It hasn't broken 78.05, 78.10. So we're waiting for that to give us confidence that it's going to continue to go lower. We don't want a false move like it was here, went back up. We want a real move. So waiting for the breakout becomes a potential short early on in the week for the Australian dollar. Moving over to the NZDUSD, another trade held over from last Friday. 72.35 was our short, setting about 46, 47 pips right now. Seen a little bit more earlier today, locked in stop loss at the current moment. But let's go ahead and zoom in on this, because this was part of the reason for entering this trade. We have the black trend line, rising trend channel, the 100 period moving average. We were underneath the orange zone, the trend channel, the black trend line, and the 100 period moving average, and some Fibonacci, by the way, into the orange zone. Taking the short at the bottom or into the orange shaded area. has given us an opportunity to realize profit now down towards the green shaded area. If we're going to see more profit down towards the yellow zone, what needs to happen? It needs to break the green zone, 71.85. So getting through 71.85, we'll realize more profit as it heads down to the yellow zone. If you didn't sell the orange zone last week, or you closed out your trade, your next opportunity to do so will be the breakdown of the green shaded area. 4-hour time frame, you can see it hasn't broken it. It's challenging it. It's testing it. Look at that, 71.85, 71.90, whatever you want to put it at. It's having a difficult time getting underneath it. So we need it to stay underneath. If it does, it gives us another opportunity to either add on to the trade, add the trade, or look for a new trade going back down towards the yellow zone for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.